Good afternoon, everyone. This is Scott Thompson, investing coach here with Schwab Coaching, and great to be here. I want to give a shout out to everybody that's joined us, Gabe and Scott Luck and Rojo. I've got Barb in the chat, and we have had some technical difficulties with the chat, so we may need to refresh the page or see that to see some of the chats come through. But anyway, we're aware of that. We're working on it. But I wanted to say hello to everyone and appreciate joining me today. The last few weeks we've been going over lots of different tools to use as an investor to help speed up the process of finding stocks and finding buy signals and things like that. Today I thought what we would do is we would go over our open positions, just do a quick review to see if there's any adjustments that need to be made, and then also do a side-by-side comparison with the two plans that we've been talking about for the last several weeks and compare the entry signal. One of the challenges that people have when they first start investing is trying to identify an entry signal that works for them. And so as we do this side-by-side comparison, hopefully that gives you some ideas that you can take a deeper dive in on your own and decide for yourselves, hey, I like that buy signal, or I don't like this one, or the timing on that's a little off. And so you can start refining your own entry rules. But before we do that, let's go ahead and jump over here and take a look at our important information. Remind everyone our presentation today is for educational purposes only. The strategies that we're talking about are not recommendations. None of the stocks we look at today are meant to be recommendations. We are going to be using the Paper Money software platform. That's a little bit different, has some different features than what is available in the live platform. So be aware of those differences. We'll be talking about stop orders today, as we always do. There's no guarantee that the execution of a stop order will be at or near the stop price. We're also just going to briefly cover our Schwab stock slices investing plan that we've been doing really since June of last year. I want to give an update on that. And then we'll jump in and take a look at our full plans that we've been doing. But remember, with the Schwab stock slices, that's not a recommendation of that investing style. That involves fractional shares, and so there's some specific risks associated with fractional shares. So be aware of that. And as always, all investing involves risk, including loss of principal. Let me go ahead and jump out here to our Thinkorswim platform just right off the bat. We have been trading now 4 different trading plans since June of last year, and I just wanted to review those quickly. Our first plan is where we've been investing a set amount. The idea was to use $5 per day to invest in the market, and what we chose to do is to take the ETF that tracks the S&P 500 and the ETF that tracks the NASDAQ 100. And there's a few of those out there. You can go research which ones you want to use. But we're investing $5 per day, which actually translates into about $7.24 per trading day during the year. And we're just buying a fractional piece of those ETFs. So that's our sample plan number 1. Sample plan number 2 is where we're taking $50 every week and we're investing those in the top 10 holdings in those S&P 500 / NASDAQ 100 indices, and those are listed here. Netflix is part of that list, but we chose to eliminate Netflix because it was so expensive for our stock investing for beginner webcast amount. And so we're buying fractional shares of these stocks as well, and they have those specific risks associated with them. But you can see we don't even own 1 share of anything except NVIDIA. We finally passed the 1 share threshold here on NVIDIA. But this has been, 2 different ways that new investors can start getting the ball rolling. One of the greatest assets that new investors have is the time in the market. And so these were just some simple plans that take advantage of what's called dollar cost averaging, where no matter what's going on that day, we're investing $7.24, or no matter what's going on at the beginning of the week, we're investing $50 in those 10 stocks using that Schwab stock slices program that's available on schwab.com. So I'm going to shrink those up now. The other 2 plans that we do are what we call the 2 green arrow plan. And there's some links available there in the description. I know I did chat some of those links into the chat panel, but you may not be able to see those because of some of the tech challenges we're going through right now on that. But if you go into the description, if you're watching the recording, they'll be in there. If you're watching now, the links are in there as well. But the first plan that's a little bit more active is, we call that 2 green arrows. We're using a 50-period simple moving average and a MACD histogram, and have generally been focusing on the S&P 100, sometimes the S&P 500 stocks, and just investing up to $500 in each position, and kind of trading a mock $10,000 portfolio with the idea of, if we invest $500, that's 5% of the portfolio. And so we could have up to 20 open positions at one time. So I want to review what's happened this week or last couple weeks in that plan. And then last week we introduced our plan number 4. So I'm going to go ahead and write that over here now. Sample plan number 4. And that one we started last week. So that was 2/18/26. And this one, we are doing a 20-period exponential moving average. So we'll call it 20 EMA. Crossing a 50-period simple moving average. It's kind of a classic crossover strategy. And the challenge that we run into last week is that sometimes, the crossover happened, several weeks ago or several months ago. And so we introduced some rules. We went over all those details last week, so you can go back and watch that recording. But what I wanted to do now is to take a look first at our open positions, right? So the very first one I want to look at here is our 2 green arrow plan. And you may remember several weeks ago, we introduced a couple of these new custom columns where we could quickly see the status of the 50-period moving average and the status of the MACD. And I don't know what happened over here, but MOS today closed below the 50-period moving average, and that was red, but maybe they're just right at the end of the day it closed back above because it gave a red arrow. But I wanted to go look at that one first. And here we are. The stock, we bought it over here about 2 weeks ago when the moving average was rising. We had a green arrow on the MACD histogram down here. And today, let me zoom in real close. Today, the moving average value is at 26.95. And at the end of the day, we did tick back above there. We closed at 26.98. So our current stop order on this is at 24.96. And so what I want to do is demonstrate what we could have done and what I was planning on doing, but it closed back above the 50-period moving average. So technically, we don't have anything to do right now. But if we did, if that closed down 3 pennies lower, what we would have done is taken the low price here today, which is 26.52, and we would have moved our stop 3% below that value. So the way that works, if I take my calculator, I put the value of the low price. And if you look right here at the top, the L value is what we're looking at. So that price was $26.52. So 26.52 times 0.97. That's where we could have and would have moved the stop if we closed it literally 3 cents lower, as we could have moved our stop up to 25.72. So, but it didn't close below the moving average there. So we are not going to do anything. We don't have anything to do here. We did get stopped out of, I want to show you this here as we kind of review our open positions. Citigroup. Citigroup gave 2 red arrows about a week and a half ago. Our stop was down in here. We got picked off on the stop. And this is frustrating and kind of feels like it's always this way. We got picked off by literally a few pennies there on our stop. And then, of course, today the stock's up, 4%, and we're not in it anymore. But anyway, we did adjust the stop on Citigroup, and we got stopped out with a little bit of a loss because we bought it over here. So we had a small loss there, and that loss really should be acceptable. One of the things that's really important for takeaways here is, when you're planning your positions, that if you get stopped out or if you have a loss on there, you really need to be okay with that. And what that really means is if you got a new buy signal tomorrow, you'd be able to take that. You wouldn't be so devastated from the loss that you like need 3 weeks of recovery time and things like that. So that's what's important when you're planning these trades. And that starts at the very beginning, deciding how much we're going to allocate to the position, how much we're going to risk per share, those sorts of things. And we've covered that in our lessons 1 through 8 that are available on our homepage for the Trader Talks channel. I'll probably show you that at the end of our session today. But I did want to let you know we got stopped out of Citigroup yesterday. Last week we had MS. We got stopped out of that about a week and a half ago. It came down, picked off our stop, kind of bouncing around here. But it looks like the trend could be changing on these. And that's really the purpose of these stop orders, is to get us out of the stock if the stock trend's changing. The challenge is, and we've talked about this in our webcast many times, is the stock was up here at 192 when we got stopped out at about 160. So we gave back about 30 bucks a share, and that can be very frustrating, but it's one of the components, if you will, of a longer term investing strategy. All right. If we go back to the monitor tab over here, you can see that, the reason that we talked about this particular tool is because we only take action in this plan number 3, this 2 green arrow plan, is when the stock closes below the moving average. So if all of these numbers are green, we're basically done with our analysis, and that should speed up the process for you. Now, last week, we introduced that crossover plan, and I added that same column. And again, this column is available there as a script in the description. They're not guaranteed for accuracy, by the way. But we have that script in there, and the similarity with this crossover plan and our 2 green arrow plan is we really don't take action or change things unless it goes below that 50-period moving average. And so both of the stocks we bought last week made money today. We're net down on that EHC position that we took. We're net up on ALC that we took. And so we don't really have any other monitoring to do. Now, you could go look at each stock individually. We're not going to take time to do that, but you could see about moving the stop up below the moving average. There's a lot of things you can do that we've talked about over the last several months. All right. Now the fun part is I wanted to go through and I've added this too. This will be in the description. Is I created a chart that has side by side our 2 green arrows and the 2050 crossover plan there together. Okay, and this is what that graph looks like. I'm going to shrink this down over here for a second. And on the left side, we have our 2 green arrow plan that has the 50-period simple moving average. It has a 1% moving average envelope here in purple, and we have our MACD histogram. And then on the right side, we have our 20-period exponential moving average in red, and we have our 50-period simple moving average in green, which basically is the same one as we have on the right side. All right, now this is what I think is fun for me anyway, is now we have the ability to compare, and I'm going to ask some questions as we go through, and then I'll throw out the answers. But I want to reinforce the rules that we covered about our 2 green arrow investing plan and the new one that we introduced last week, the crossover plan. So let's look at this right side first. Now the stock, the moving average is falling. Okay, if I put my cursor on there, I can see the value up here at the top. It's kind of buried, but it's pretty evident that moving average is not rising. But we do have a green arrow on the moving average because the stock price is above that, and we have a green arrow just yesterday on the MACD. So my question is this a valid buy signal based on the 2 green arrow investing plan that we've covered many times over the last several months? And the answer to that's no. It's not a valid buy signal. And the reason is because the moving average is falling. Okay? The 2 green arrow plan is meant or designed to buy uptrending stocks when they have those 2 green arrows. The reason we don't buy necessarily on a downward moving average is because it's very possible the stock could get above it like it did a week or 2 ago and then drop back below, and the trend just keeps going down. So we're trying to give it the benefit of the doubt and let that trend resume before we buy it. So in our 2 green arrow plan, Apple's not a buy signal. However, if we go over here, now I'm going to maximize this screen for just a second, and then we'll go back. So if you right click on that, you can click maximize. And this plan, the plan we introduced last week, was to try to catch the beginning of a new uptrend. You'll notice on Apple, let's go out to like a 1-year chart here on Apple. You see the last time that we got that 2050 crossover, there was maybe one in here, but right here, it's pretty evident, right? You guys see this? Right here back on the 7th of July of 2025, Apple had been in a downtrend. We got the 2050 crossover, which is the whole point of this plan, is we're trying to catch this type of move. And had we had that plan and implemented it back, we could have bought Apple back there somewhere between about 208 and 216. And then, it closed below the moving average here a couple of weeks ago, or about a month ago. We would have moved our stop up and we would have been stopped out in this drop, but we would have had a nice little gain there, right? And then past performance obviously doesn't guarantee future results, but this is what we're trying to catch. So what do you notice going on today and yesterday with Apple? You guys see what's going on there? The moving average, the red line here, is a 20-period moving average, and it crossed. Now, did it cross right here yesterday, or did it cross today? How do we tell? Well, if I put my cursor on this day, I can go straight up here to the top, and I can see the values of those moving averages. So the green line is my 50, and that number is just right over here. But the green line said 265.76, and the red line, which is the 20-period exponential moving average, was 265.77. So technically, that was the buy signal or crossover day. We obviously can see that the red line's above the green line now. And so this is a valid buy signal for that 2050 crossover plan. So I'm going to go ahead and buy this based on those rules. Now, the rules we covered last week, this was the entry signal when we got the crossover, and that initial stop, do you guys remember where we set that? The initial stop, we wanted to put like 3% below support. And there was a great question last week. It's like, well, how far back do I go? Well, usually within a couple weeks, you can see where those support levels are. And all you're really trying to do is identify those low prices. So I think we had support here, and we certainly had some support down in this neighborhood, support or areas, not specific prices. But we like to put a specific price so we can get a stop order, right? So we're going to set our stop 3% below 255.45. Okay. Just double checking here. I think that's the rule that we set. Yeah, initial stop is 3% below support. So how do we calculate where the stop order goes? Well, let's go grab our calculator. We have the number there on our line. So 255.45 times 0.97. And so our initial stop is going to go at 247.78. Now, another thing that's really common with these longer term investing plans is the initial stop, and really the stop order altogether, feels like it's a long way away. I mean, we're going to go in here and place an order at the closing price at 274.23, and to set a stop at 247.78, it's like $30 away, over 10%. But that's just kind of the nature of this initial stop order when this trend might be starting up again, okay? Now, the last thing that we need to do here is we decided in our discussion last week with our investing plan, we were going to invest up to $1,000 per position. And so how many shares can we buy of 274? Well, that's going to be about 3 shares. So let's do that, okay? We're going to right click about here on the close. We're going to create a buy custom with stop order. And we're just going to go in here. We'll put our closing price just came in across there for us. So we're good on that. Let's go up to 3 shares. We're going to lock that link together. So we're going to buy 3 and then have a stop order on 3. We said our stop was at what, 247 and change. They pull up our calculator again. That's 247.78. So we'll put that number in here. And we want that stop order and probably the buy order good till canceled. The market's closed right now, so this is really an order for tomorrow. So we're going to hit confirm and send, and then we just want to review the order. buy 3. We're going to check our buying power, make sure that's not over 1,000. We have a stop order there at 247.78. No guarantee we get filled at that price, but that's going to trigger that market order. And then if we have a group set up like I do for our crossover system, we're going to put that in there, send the order off, and now we have a buy order sitting on that for tomorrow. Now, when you're in that grid, the grid that I shared that's there in the description, we're on a single chart now. I can use one of these arrows at the top right and go to the next chart, which we had Apple with our other study set. Or if I want to go back to the grid, I can click on this kind of minimize sell or return arrow, and then I get both of those back. Okay, so there's taking a look at Apple. Now, I want to go talk about another stock that everybody's familiar with. And this one I found, I did things a little differently this today than I've been doing. I didn't run the searches that we've been talking about. I went back to kind of the old method where you would go through a watch list, like the Dow Jones or the S&P 100, and I happened to go through both of those. And so one of the stocks that I found in that method was I found NVIDIA. Now, I want to talk again about NVIDIA from a standpoint of comparing these entry signals. Okay, on the left side here, the stock today closed above what I would consider a resistance level at about 193.60-ish. Okay, the stock's above a rising moving average, and that means it's a green arrow on the moving average. The MACD gave a green arrow back here on the 10th of February. And how long are green arrows green? Well, green arrows are green until they turn red. So the green arrows are green until they turn red. So we actually have a valid buy signal based on our 2 green arrow plan here on NVIDIA. Now, you also notice I've already got a stop order in place on NVIDIA. We bought NVIDIA a while back. We didn't get stopped out as it chopped around here. And now it looks like maybe, okay, no guarantees, of course, maybe that stock will resume the trend. Let's zoom out. Let's maximize this page for a minute. Let's go out to a 1-year chart and see what happened. So we bought NVIDIA the first time back here at, what is that, about $155. We added to the position here just before we got a red arrow a couple days later. We added to our position here, and now the stock's been chopping around sideways, and our stop, you can see we almost got stopped out through this choppy sideways movement. But that's again, the point of this plan is to try to give us a long time in the position if it's possible. And so it looks like we're breaking out. We obviously have some resistance on the high end. Let me go ahead and draw this in here so you guys can see it. But we have our high end resistance up there about 212. When I draw my resistance lines, I like to get like the extreme high is like the top end of that resistance area. And then I like to draw where I get maybe multiple touch points. So I think the zone of resistance on NVIDIA based on these numbers here is about 208 to 212. That's kind of that resistance area. And so some people might wait for it to break out above there. We're just going to look at this again now in our 2 green arrow plan. We have a breakout, we have 2 green arrows. And we've talked about this a number of times too, that the green arrow, when it's inside all this choppiness, a lot of investors won't act on those green arrows, because it's kind of sideways or it's oscillating back and forth. And so they usually will wait for a break of resistance. And I think we got that today. It closed above resistance. That technically is a breakout. Now, could it fail tomorrow? Absolutely. So we're going to add again to this position. We've been doing $500, so we can probably buy 2 more shares of this. And then we have to decide, do we want to keep our existing stop or do we want to raise that up? Now, our stop rule says to put the stop 1% below the moving average. So let's calculate that. So that's 185.41 if we just look right straight up here. Today's moving average is at 185.41. And if we go to our calculator and we go 185.41 times what? Times 0.99, that's 1% below. Or, and this is why I added it, if I put my cursor right there on that day, now our font's too big to see it, but if I put my cursor like right there, It looks like we're about 183.55. If you go right over here, you can see that purple box, and that's exactly where our stop is. So that's why I've added that envelope so I don't have to do the calculation, but that's how you do it. So the question then would be, do we want to put our stop at 183.55 with the choppiness that we've seen in this sideways motion? And when I ask that question, what I'm really asking is, how am I going to feel if my stop is up there? I'm going to say we're just going to move that up 183.55. Oh, look at that, landed right on it. 183.55, and this is our 2 green arrow plan here. So right there is, if I got stopped out of there, but it didn't really go below maybe this low from a couple days ago, go ahead and send that off. How would I feel about that? And there's no right or wrong answer here. We are assuming that with the stock breaking resistance, this 193 area is going to be old resistance turning into new support. So if it goes all the way down here, then obviously this breakout has failed. But we still want to ask ourselves, as an investor, so maybe I'm trying to take a 1 year, 2 year, 5 year position on this. Do I want to get knocked out of it at 183.55, or do I want to put my stop down below this low on the 17th, which is 179? And so I want to bring that up. I'll leave the stop there kind of based on the rules, and we'll just see what happens. All right, but we're going to move our stop up to there. We're going to buy 2 more shares. So I'm going to put my cursor right here, right click, buy custom with stop. Our stop is at 183.55. And it looks like the closing price, I didn't quite get there. There's a little 195.56 there at the top left. You guys see that? We'll make those good till canceled. We'll lock those up. We can do 2 more shares because this account, we're just doing $500. So now I hit confirm and send. We're going to buy 2 at 195.56 here in our paper money. We have a stop at 183. Oops, said 47. I'll have to adjust that. We'll put it in our 2 green arrow box. So we want to go here, 183.55 is where that stop is supposed to be. Hit confirm and send. Put it in the 2 green arrow group. Recognize the stop may not get triggered there, could be much lower. We send that order off. And now I've got an order in there. And, I bought 2 more shares, but what we'll do is probably when this order fills tomorrow is combine these 2 orders into just one stop order. It probably doesn't make a big difference because there's, no commissions on the online, execution of these orders anymore. So it probably doesn't matter. But that used to be a big deal when you had to pay for every transaction. So just be aware of that. All right, and it looks like we're still having some technical difficulties with our chat. So if you've been chatting questions in, I apologize. I literally am not seeing those like I normally do. Yeah, so if you have some questions that have come up from this session, please go back in on the archive, which should be available later this evening, this afternoon, and just type your questions in there, and then I'll see those and I'll answer them. All right. But there's taking a look at NVIDIA for a 2 green arrow trade. We've got enough time that I want to take a look at a couple more examples, as many as possible. And I'm going to go back. I'm going to click this return arrow or minimize cell to go back to our grid. You'll notice I have these linked up with the same number. That means that when I put a symbol over on the left, it'll show up here on the right too, which is really cool for this comparison type analysis. So let's take a look. As I was going through the S&P 100, I found this stock, KHC. Okay. Now KHC, let's take a look at this one. What has been the trend of KHC as you look at this? Well, that one's pretty easy to see. If we look at the left side of the chart and go to the right side of the chart, if we drew a line there, it's sloping down. On this right side chart, it's pretty evident it's been trending down. And so, again, some questions. let me zoom in on the left side. I'm going to leave these side by side so we can talk about them. But we have a green arrow on the moving average here. The stock price has been above, and it looks like, I guess in order to check this, let me maximize this real quick. The moving average value today is at 2402. Do you see how I found that? It's right over here on the right, or it's up there at the top. Yesterday, the value was at 2402, and the day before was at 2401. So this is now your discretion. Is this moving average rising, or is it flat, or is it falling? And technically it's higher today than it was 2 days ago. It's the same as it was yesterday. So again, I don't really think this is a valid buy signal based on our 2 green arrow plan, even though the MACD is green and the moving average is green here, because the moving average is more flat than rising, and a rising moving average is one of our rules. Okay, so what traders would do with KHC in that case, using this 2 green arrow plan, would be to say, okay, where's resistance? Looks like we've got some resistance in here. Again, I like to get the multiple touch points. So there's kind of the lower end, in my opinion, of resistance. Here's the extreme highs up there. So there's our area of resistance. And that's just how I learned how to do this. There's, no perfect way of drawing the area of resistance, but that's how I like to do it, is get a line in there with multiple touch points on it where it kind of makes sense. Draw the high end of resistance, because that's where sellers stepped in and they pushed the price back down. So somewhere between 25.20 and 24.90 is where this resistance area is. So people trading the 2 green arrow plan would probably wait for it to break that resistance before they called it a valid buy signal. All right. Now, on the other hand, the plan we talked about last week, which the whole purpose of that 20-50 20 period exponential moving average and 50 period simple moving average plan, is to try to catch the trend change. And so does the trend change all the time? No. Here's a good example. Let's maximize this one now. We got a nice crossover here. It trended up for actually a few weeks. Looks like, oh, here we go. We're going to have a nice uptrend. I'll be in this for 3 years and hopefully make about 400%, right? That's what we would have hoped and thought. But trends don't always do that. The trend changed back to down. We got a bearish crossover here. This is way back in September. And if we zoom out, we were downtrending, 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 and we had another crossover right there. So we had a valid buy signal on KHC with the crossover system back here, probably at the closing price up there, about $25, chopped around, which is very common. And we talked about this last week. These crossover systems, sometimes they take a little bit of juice to get moving, right? And so, we still have the 20 period moving average above the 50. This technically is a valid entry signal right now, which I'm going to go ahead and buy it right now just because I want to put this in our crossover system. However, some people may still wait and say, well, I still have resistance here. I don't really want to hold this sideways for 3 weeks or 10 weeks or however long that maybe stays sideways. So they might wait for a breakout. But, again, we're just going to use the real simple rule set. If it goes, we've got the crossover. Our last support level, I would say the last extreme low, or the short-term supports right here. And then, of course, down here's a support area. And then we have kind of this neighborhood right in here. And so as an investor, you would decide where you want to put that stop. And the initial stop, again, is 3% below that recent support. The question was, how far back do I go? Usually about 2 to 4 weeks is plenty. Some people like to have a little bit looser stop. Some people like to have a little bit tighter stop. I'm going to split the difference here. I'm going to go ahead with 22.99. Let's take our calculator and see where that stop's going to go. 22.99 times 0.97. And so our stop's going to be at 22.30 on this particular stock. So let's remember that number. We're going to put an order right here. The close, right click, buy custom with stop. And the closing price today was $24.56. And we said our stop was going to be what, 23, 20, what was it, 21 something? I can never remember. 22.30. So we're going to put our stop at 22.30. And now we kind of have an interesting question or choice that comes up. We have a very low price stock. You guys see that? So if we grab our calculator again and we said, well, in this crossover system, we're saying I can invest up to $1,000. Okay, divided by, we'll put 24.56. So we could go in there with 40 shares. You guys see that? That's just going to be about $1,000 worth of this stock. But we also want to double check ourselves and see if 40 shares is acceptable, not only in the allocation, the $1,000 we're investing in this position, but also if it went down and hit our stop at 22.30, would we be okay with the net loss or the potentially bigger loss if it gaps over our stop, if we get stopped out there? What's the difference? What's our trade risk? This is a term that's important to understand. Trade risk equals the difference between the entry price and the stop price. So quick math here. I know it's late in the day, but $2 and about 26 cents. So if I take my calculator and I say $2.26 is my trade risk, my risk per share, times 40 shares. If I got stopped out of this in our mock little small portfolio, would we be okay losing $90.40 or more, if it gaps over, say, is that okay? In our 2 green arrow plan, we kind of set a limit of a $50 loss, and we could do something similar as a percentage, saying our max loss would be around $100 for this $1,000 allocation model type of plan. So generally thinking or speaking, I think the $90 would be an acceptable loss. One of the things I always like to ask seasoned investors is, how would you like your next loss to only be $90? And of course, everybody raises their hand saying, oh, that's way better than the $1,000 loss I took yesterday or whatever, right? So I think we're good at 40 shares. I think we're good based on the rules of this sample plan to go ahead and place this order. And so I'll hit confirm and send. This one's going to go down into our crossover plan. And we're about $1,000 here. We double check our stop from our numbers and we send that order off. So we've got a working order again for tomorrow. Visually, we can see our stops down here. It's going to have to break the 50. It's going to have to break support. It's going to have to break support again before it hits this stop. And that's kind of how this crossover system works, well or better than saying having a real tight stop and people just get whipsawed out of that, which is one of the pitfalls that we talked about last week. All right. Okay. So let's do one more example here and let's go back to our side-by-side comparison and let's take a look at NEE. Okay. NEE. Now, on the left-hand side, let me zoom in here and we'll zoom in on the right-hand side. What's our scenario here? Do we have a moving average that's rising? Check. The stock price is above the moving average, so that means it's a green arrow, and green arrows are green and for how long? Until they turn red. Okay. And we just yesterday got a green arrow on the MACD. This is a fairly recent new buy signal using the 2 green arrow investing plan right now. Okay. On the other side here, using our 50 period and 20 period crossover plan, the entry signal looks like it was right there. Okay, right there on the 26th of January when NEE was trading at $85. Now, again, this is not always what's going to happen, but I do want to illustrate that we are creating investing plans that have a purpose. Each one of these is to try to stay in an uptrending stock. The crossover plan is designed to try to catch the beginning, more or less, of a new uptrend. And I think all of us would have been pretty happy getting in here at 85 with the stock at 95 here in just about a month, right? It's a pretty nice growth over the last month using a rule set that we introduced last week. Now, not all stocks do this. We've seen examples of that. But the question then becomes well, how do I get into a stock like NEE when the buy signal happened here? What if it never goes below the 20 period moving average again? Well, last time we talked about when the stock pulls back a little bit and generally we like it a little closer to the 20 period moving average, but that bounce off of the 20 period moving average or a bounce after the pullback, that could be a valid entry based on that crossover system, because if it never starts trending down again, the 20 is always going to stay above the 50, and we may not get that crossover entry. So we did talk about some alternative entries, a bounce off the 20 period moving average. And I want to place the order on this one and then show you an example with Intel of what a close back above the moving average entry signal could look like. So let's go NEE. We have our stop down here at 84.47. We're going to right click there at the close, buy custom with stop. We're going to use the 2 green arrow plan here. So we're going to go in there with 5 shares for $500. Hit enter. We're going to put our stop. We said what, 84.47. Well, let's put our entry price 95.11. That's the closing price. We're going to set our stop at the 1% below the moving average, which is 84.47. And we'll make both those good till canceled. And we'll send this order off for tomorrow. And, you know, if the stock gaps up, it's going to have to pull back a little bit before the order would fill. So there's our 2 green arrow. Send that off. And, you know, ideally it would have been to buy this a couple days ago on that crossover plan. But let me pull up Intel as we kind of wrap up today. Intel's kind of interesting because, you know, obviously it does not have 2 green arrows. The MACD is red right now, so it's not a buy signal on that plan. And we come over here, let's maximize the sell on the crossover plan. And another entry that we talked about, there was that crossover initially, bounces off the 20 period moving average was another entry. But if it was trading below that 20 period moving average and crossed back or closed back above the 20 period, we considered that another alternative buy signal. And so, you know, on those add points or those other entries rather than the crossover entry, we were going to set our stop 1% below the moving average, just like we do for the 2 green arrow plan. So, you know, you can go work on that on yourself for homework here. Again, none of these stocks that we've talked about today are recommendations, but hopefully this is helpful for you as you go through and you have some tools now to, you guys can compare the different entry signals based on indicators, on moving averages, or you can use them based on the MACD in a moving average. I did want to show you our, you know, our Trader Talks channel. This is just, you can search in Trader Talks. Again, I'm not sure this chat will work, but I'll try it. But if you come down here in about the middle of the page, our stock investing basics playlist, this has our most current lesson 1 through 8. Now today we've just done more of a comparison on this lesson 4, you know, which is plan your trade and trade your plan. We've been going over that all day today. So hopefully that's helpful for you, everybody. You know, have a great day. Appreciate you taking some time out of your schedule. And as always, great success in your trading. Thanks, everybody.